Hello, thank you so very much for joining us for Spectrum Group's webinar for August of 2019. We'll be going over our monthly Affluent and Millionaire Investor Confidence Indices today, as well as our recently published in-depth report with high-income millennials. In addition to that, we're going to talk a little bit about our Wealthy Investor series and our visual analytics technology. My name is Randy Wostratzky, a director with the Spectrum Group, and I'm joined by senior writer Kent McDill. I'm going to turn it over to Kent to go over the June indices. Kent?
Thank you, Randy. I'm here to present the results of the Spectrum Confidence Indices and Household Outlook for the month of July. In July, the Spectrum Affluent Investor Confidence Index and the Spectrum Millionaire Investor Confidence Index both reported significant drops, despite the fact that each of the three major stock market indices reached record highs during the month of July. The SMICI, which measures the confidence of investors with at least $1 million in investable assets, fell by 10 points, a double-digit drop not seen since last fall. The SAICI, which measures the confidence of investors with at least $500,000 in investable assets, fell by 7 points, losing the identical gain from June to July. Investors may be reacting to continued confusion over global trade negotiations with China, concern over the impact of the new British Prime Minister and his impact on Brexit, and worry over the potential for further confrontations with North Korea and Iran. The top of this chart shows how deep the drop was for both the SMICI and the SAICI and indicates that there really has not been a great deal of recovery from the December stock market slide. Over the past 12 months, there have been 3 monthly jumps in the indices, but the rest of the year's worth of results show a decreased confidence among both segments of investors. The lower chart on this page shows the results of the Spectrum Investor Confidence Indices since 2004, and you can see that the results have remained rather consistent since the recovery from the deep drop of the Great Recession back in 2004, now more than 10 years ago. Reflecting the loss of confidence among investors, interest in the individual components of the index have dropped from June, when investors were much more confident about investing results. Interest in investing in individual stocks fell by more than 5 percentage points, and there was a 4 percentage point drop among all investors in stock mutual fund investing. The only category showing an increase in investing was cash, as investors showed interest in adding to their allocations but did so in the safest possible manner. The Spectrum Household Outlook is a measure of how investors feel about the future regarding 4 components of their household finances. In July, the outlook fell slightly, but remained well above 20, where it has been for the past 6 months. In fact, the outlook has shown more consistency over the past 6 months than at any similar time period over the last many years. It was a year ago in August and September when the outlook climbed to unusual heights, and it'll be interesting to see if the indices follow that pattern again this year in the next couple of months. 3 of the 4 components which make up the outlook saw a decrease in July, but none of the decreases were large. But when we segmented investors based on wealth and working status, it was the millionaires and the investors who are still working who reported deep drops in their outlook over the economy. If the Federal Reserve drops the benchmark interest rate in early August, as many predict it will, there could be an improvement in the outlook for the economy going forward. More details about the Spectrum indices and outlook are available upon request. Now I will turn this conversation over to Randy, who will discuss our study on high-income millennials.
Thank you very much, Kent. And as we mentioned at the start of the webinar, we just recently published an in-depth report focused on high-income millennials, certainly a segment of the wealthy investor population that is of the utmost importance for financial service advisors and providers across the country. Just a brief background on the methodology here. When we talk about high-income millennials, we're looking at those that, if they're single, they have to have an annual income of over $100,000, and if they are married or have a partner, it has to be $150,000 or more. As we mentioned, we're using income as a quantifier and qualifier for participants in the survey, as opposed to net worth, not including primary residence, which is what we typically use. The reason for that being a significant portion of this population does carry debt, therefore their net worth might not be exactly to the point where other older generations might have it. And so we wanted to focus on those who are generating high incomes and therefore are an ideal candidate for a client of an advisor or provider in the financial services industry. One thing that we asked about was what were some of the factors that have an influence over career decisions. Not surprisingly, the salary was the number one factor by far, followed closely. You can see there on the left-hand side by the benefits package that they're offered there. You can certainly see the actual enjoyment of the job as a factor as well. One thing that is really interesting, you can see there on the bottom right-hand portion of this chart, is over a third identified employee-sponsored student loan payoff programs as a factor that has influenced their career decision. So knowing that such a significant portion of this wealthy millennial population does carry student loan debt from their college and graduate degree programs, and certainly look to their employer for assistance in helping manage and pay down that debt. When talking about the factors considered when making investment decisions, you see employment status certainly as the most significant one, but obviously seeing number two, the current level of debt, as the second most important factor that these high-income millennials take into consideration when making their investment decisions is certainly different than older generations. We all know that students coming out of college are carrying more and more debt than previous generations, and that's having a significant impact in how they are saving and how they are investing. And you also see right now you don't have as much of a focus on environmental or social impact as one might think. You can see on the right-hand side there only 13% said that the environmental or social impact of an investment is a factor that is considered. Many in the industry think that number is a lot higher, but as we can see here, certainly not one of the most important factors that high-income millennials take into consideration when investing, that there are other things that they prioritize above that. Here we did a little bit of age-based segmentation. You can see on the bottom there, red is those that are 22 to 29. The green is those who are 30 to 34, and then the oldest millennials are represented by the purple line there, 35 to 38. One of the significant takeaways here you can see in the red line, the younger 22 to 29-year-old high-income millennials have a much higher interest in a number of different areas you can see there, including financial planning, retirement planning, budgeting tools by a significant margin is well above the other older generations. And then even on the right-hand side, you see those youngest millennials that want help with socially responsible investing, with loan and credit management, and then also with real estate advice as they're hoping to and looking into maybe purchasing their own home. What's significant about the oldest millennials, those in the 35 to 38 category, you can see they're both tax strategies at 31% is greater than both of their younger counterparts, as well as life insurance advice. And so specifically on the life insurance side, you have the older millennials that are more likely to be married because they are older and therefore need some advice when it comes to the insurance component of their financial blueprint. So something to keep in mind as you're looking as a provider or an advisor and trying to provide more holistic advice and various services to these high-income millennials, that based on their age, it's not just millennials as a whole, that the older millennials do have different needs and are looking for different services as opposed to their younger counterparts. And then we also ask a question about how high-income millennials define success. Just another question that is certainly different among millennials as opposed to other generations. Not a mutually exclusive question here. You could select any number of the responses that you would like. And the top two at 70% and 68% all had to do with their finances. So 70% being financially independent, 68% being financially stable, significantly above those in the 50% when you're looking at leisure activities or a marriage relationship or owning a home. And then the lowest actually is working in a field that they're passionate about. And so while that's something that is certainly a consideration and is taken into account when millennials are looking at that concept of ideological success, when compared to other options that are out there trying to define success, it is the lowest one identified. And then finally, we're looking at the method of finding a financial advisor. And you can see, of course, by a very, very significant amount that a referral from a friend or family member is how they did get to know and get introduced to their financial advisor. So it's very important as a financial services company to encourage those in the field and those that are client facing to ask for that referral from clients that you're currently working with to those of the younger generations to trying to develop that next generation client development pipeline. You can see there's a number of different methods there that are tied at 7%. Towards the bottom is one that I find very interesting, thinking that in a tie for second place of the most impactful way of finding their advisor was that they already had a 401k account with their provider. So you have so many of the younger millennial generation that getting their first taste of managing finances comes from their qualified plan through their employer. And so you can certainly see that the 401k account with their provider through their employer-based defined contribution plan is a contributing factor to how they got in touch with their financial advisor. Just a reminder, we do have our Wealthy Investor series that covers a myriad of topics important to the financial services industry. They're all focused on how wealthy investors interact with and conduct business with financial service companies. You can see the list of topics there are the topics that we will publish our reports on or have already published reports on this year. Our defining financial planning piece is going to be finished up here within the next couple of weeks. And then we have the other 3 reports that will be finished up and delivered to clients through the end of the year. But in addition to all of the reports that our clients who subscribe to this series have access to, there is also our visual analytics technology. And this is the way that we upload our data and allow our clients to access our data via our proprietary analytics platform. And using a variety of different drop-down segmentation vehicles, they're able to look at our data by various demographic components such as age, wealth level, advisor dependency status, retirement status, things like that. So if you'd like to learn more about our Wealthy Investor series, please don't hesitate and feel free to contact me at your convenience. Thank you very much for joining us, and have a great day.